G'day investors, welcome back to Pete's Investing. Today is May 17, 2024. This is the update for the gold, silver, Bitcoin and US dollar markets. And you can see there that gold, silver and Bitcoin have risen slightly since our last update and the US dollar has dropped. Now in terms of our heat map, we look at the CCI 150 trends on the monthly, weekly and daily timeframes. And you can see here, based on the monthly, they're all bullish for us, gold, silver and the US dollar and Bitcoin. On the monthly. On the weekly, there's a bit of a mixed bag there, and on the daily, predominantly bullish, with the exception of the US dollar, it's bearish. Now, I've introduced this three-step process in terms of trading and how to place your trades and understand when to trade. So basically, step one, determine the trend and direction to trade. So for example, if you're trading on the daily time frame, then you want to at least minimum look at the weekly trend. Or if you're trading at the intraday time frame, like the 1 hour or the 15-minute, then the minimum you should be looking at is the daily trend. Step two, trade on the direction of the CCI 150 and look for a fresh breakout from the CCI moving averages. And I'll go through some examples of each of these. And step three, close a trade when the CCI 150 enters into the CCI 150 moving averages. So first off with gold, what I've got here is the monthly, the weekly and the daily charts, and at the bottom you can see there the CCI 150 for each of those, and where the CCI 150 on the monthly, for example, is broken above the moving averages, I've got a color code here on the chart that shows a bullish movement when it's green, and when it's red or pink it's below those moving averages. But at the moment on the weekly chart you can see that it's broken within that moving average band, so that's clear or white, and that's a neutral positioning. And on the daily, we're actually just a fresh breakout to the upside of those moving averages, so it's giving us a green or a bullish signal. Now you will notice as well we've got a bearish divergence between those peaks on the CCI 150 versus the price chart, and I've drawn a little target area there, and that's actually hit its target, and that target area is the 23-48% minimum target range of the Fibonacci range, and that would have been between that level and that high, and that's a 23-38% Fibonacci range. So that's the minimum target. It's hit that range and then it's bounced from there. We don't get too aggressive and go for anything lower, but sometimes it does actually break a lot lower than that, down past the 50 and the 61%. And if it breaks the 61%, that's a key area to look out for a reversal of the trend. So again, that's where we are on the daily. Now, if we go to the daily chart here in the 1 hour chart, and I use the daily chart here as a reference point, I've still got these color codes here with the green and pink and clear chart on the chart, on the price chart. You can see there on the daily again, we've got that bearish divergence. It's hit our target. Now on the hourly, if you're trading the intraday time frame, and you apply this to basically any approach. So if you're trading on the 1 hour in this example, you base it on the trend of the daily. So for example, here you can see there, those last 3 days we're bullish, we're green. It's broken above the moving average of the CCI 150. So we only take long trades from there on. So you can see there from that period, I've got some little crosses and arrows there. You would have gone long on that arrow there, probably that one there, one of those ones there, gone long there, and you would have taken your profits when it broke into that, when the CCI 150 breaks in that moving average band. So you would have taken a little profit in that little range there. You would have avoided going long or short during this period because the daily is in a long positioning, so you only take long positions, and we've got a fresh breakout on the long side here, so you would have gone long on that point there when it breaks above the moving average band, and so far we're still in a trade on this one. So that's how it works. Next we've got silver on the monthly, weekly and daily. You can see we're bullish on the monthly, bullish on the weekly and bullish on the daily. Now you'll notice on the daily as well, it's broken up past this resistance we had at 28.98, and I've drawn this diagonal ascending trend line, and it's actually fluctuating around there. It's hit those few points there. It broke up through that diagonal trend line, and it's actually gravitating back towards that with the last couple of days of trade with those wicks. Again, you'll notice the CCI is bullish, so again, bullish trades on the intraday time frame we're demonstrating in this example. Going to the daily chart and the 1 hour chart, again for trading examples, again you would have taken long positions from that day onwards and you'd still be in long positions. So looking at the 1 hour, so back here for example, you would have taken some long trades. I'm just looking at the the daily chart there, you can see that on that big bullish chart there, you would have taken long positions from around that point there when the CCI broke above the moving average band, and you would have closed it out when it turned inside that moving average band. So you would have taken nice little profits there. Avoid taking those trades there, being you might have got in and out with a false break there with a very small stop loss on those two candles there. Entered another position there going long, and you would have taken your profits on that when it turned into that moving average band again. Avoid trading that period, gone long again there, and so on. You get the idea. There are a few false breaks, obviously, a few small little, like for example, that would have been possibly a break-even trade, another break-even trade there possibly. But overall, the trend does move in the direction of the daily if you're trading on the 1 hour time frame. So that's where we are on silver. The US dollar basket's showing us a different variety of bullish, neutral and bearish signals. Again, on the monthly, we're bullish, but you see there the CCI is starting to turn down. On the weekly, it's already broken into the moving average band, so it's a neutral positioning. And on the daily, it's bearish. The CCI is predominantly below the moving average band. So at the moment, if you're trading on the hourly, only take short trades. So again, jumping to the daily and the hourly charts here, and we use the daily as a reference point. So again, from that point onwards, on the 1 hour chart, you would have taken short trades only, and that would have aligned back to around that positioning. You would have avoided taking those little trades there because that was bullish with the CCI above the moving average band, and you would have taken the first short trade there, opening a trade there, going short, and you possibly would have stopped out there, but entered again in the next hour at that point, and you would have stopped out or closed out the trade at that point there when it broke into that moving average band. So again, always trade with the trend, avoid trading against the trend on the higher time frame. So at the moment, the US dollar is still declining. Again, you saw that on the monthly, weekly and daily trends. For Bitcoin, on the monthly, we're bullish, although it's starting to turn down, notice there, but it's still above the moving average bands. On the weekly, it is below the moving average band, it is bearish, and on the daily, it's bullish, making a bit of a recovery. So again, a bit of a mixed signal, but predominantly I'd like to see the weekly and the daily. If you're trading on the hourly, I'd like to see the weekly and the daily moving in the same direction, but that's a positive sign so far on the daily for Bitcoin. And if we jump to the daily and the hourly charts, again, I've got the daily here as a reference. You see that here would take predominantly long trades on the hourly based on the daily being above the moving average band, and that would have been going back, just measuring it there when that day started, would have been somewhere around there. You would have taken a long trade there. You can see on the daily, that's where the green or the bullish movement started. So you would have taken a long position when the CCI there broke above the moving average band. You would have taken a long trade there. You would have closed it out when it broke into that moving average band and avoided going long again. Now you will notice we did have a divergence, a bearish divergence here on the CCI versus a bullish movement, higher highs on the price. And the way we draw that, we draw a Fibonacci from that previous low to that high, and that would have been the 23-38% Fibonacci range, and it actually bounced in there. It doesn't always bounce in that range. Sometimes it breaks through to the below that, but in this case it did bounce from there. There's no guarantee it's going to continue going up, but in this case it looks like it has bounced off that just shy of the 38% and making further upside. So this could be potentially another long entry beginning, going long at the moment, because remember the long positioning is valid because the daily is also bullish. So far bullish on Bitcoin, but again, making sure we do get some little movement to the upside and don't get too aggressive, depending on your risk appetite, of course. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.